Okie dokie, today we're talking about Wall Street bets and how much they cost the short sellers on the market Friday, January 22nd, and over the last 10 days. Wall Street Bets is a self-described group of degenerates. I take that back. They're not a group. They're a community, a movement of degenerate millennials who live in their parents' basement, and they are going ahead and ripping off the major players on Wall Street. Good for them. Great job, GG. What we'll be discussing in this video is how they ripped off Citron Research, also known as Shitron Research, and Melvin Capital. We'll go through the total losses really quickly, kind of tell you a little bit about the group to begin with. Over the last 10 or 15 days, they've really been messing around with GameStop. That would be GME. Here's a chart of GameStop and their ticker being GME. What you can see on this chart is right about here, January 12th, it began to take off a total of, let's see, I don't know, 254% in 10 days. That is absolutely ridiculous for a company like GameStop. But you know what? Their due diligence indicates that GameStop may have a bright future. Don't take any investment advice from this channel. This is just a YouTube channel. And definitely don't listen to these guys over here. They're a bunch of YOLO tendy weirdos that want to go ahead and make as much money as they can off the stock market. Some of them have, but a bunch of them have lost. So keep that in mind and do not do anything that's discussed on this channel. What they did Friday, January 22nd, was go ahead and drive up the price of GameStop to close out some short sellers, Citron and Melvin Capital here. These two companies went ahead and realized probably multi-billion-dollar losses over the last 10 days. Hopefully, it wipes them out, but, who knows? We'll see. Here's an article by Market Insider published today, January 23rd, and it says that these people went ahead and crushed Citron and Melvin Capital to the tune of $3.3 billion in mark-to-market losses over the last 10 days. 1.6 billion of that being on Friday alone. So we have a couple of goodies at the end of responses people have on Twitter and such. But basically what Market Insider says here is that, if you're a research firm, you might want to just maybe not mess around with what they call the meme stocks. Because, you know what, you get a bunch of degenerates that YOLO their money, that would be their stimmies, and then the money they make from selling their t-shirts on the eBay, apparently. We'll link this one as well if you'd like to buy the Ribbon vs. Rainbow Bear. You can probably figure out what that means. Okay, so anyway, in the last 10 days, they've been able to affect a loss of $3.3 billion. I'm not sure how much money Wall Street Bets has actually thrown into the market or GameStop stock. But keep in mind, this is just on GameStop. This is not across the market. This is one company. And these two companies here may very well come out on Monday as bankrupt. And again, while you'll probably get Wall Street Bets saying GG to them, that meaning good game for you boomers out there that just lost a portion of your retirement fund if it was invested in either one of those two companies. So that's it. You're looking at $3.3 billion in losses over 10 days, $1.6 billion being just yesterday. And here's some goodies on GME. So this gentleman here, Josh Mitchell, that's at JMitchX, he's replying to at Jim Cramer. Never put fundamentals of a company over behavioral finance. Doesn't matter, GME valuations don't justify the market cap. Investors believe in it. That's all that matters. And a word of advice, don't short a WSB meme stock. What that means is Citron here got hashtag wrecked by Wall Street Bets. And another good one I found, this thing ends with Wall Street Bets taking Berkshire private. I bet they can actually do it. That's Michael Batnick at Michael Batnick. All right, hey, y'all take her easy out there. That's the video for today. Later, man.